Incentive stock option planning, the relationship between tax filing status, income, bargain element, and tax liabilities. When investors begin learning about incentive stock option, ISOs, and alternative minimum tax, AMT, they often ask, how much of a bargain element can I have before I am subject to AMT based on my tax filing position? In today's educational video, I will walk you through various scenarios so you can understand what the bargain element might look like based on different income levels and tax filing status. Additionally, I will include net long-term capital gain in this scenario because a follow-up question is, does increasing capital gains raise my tax rate? Net short-term capital gains are taxed at earning income tax rate, and we are not going to include net short-term capital gains because that will increase our earning income. Net long-term capital gains are taxed at 0%, 15%, or 20%. Adding net long-term capital gain does not raise our earning income tax rate, but it can increase our capital gain tax rate. This is because net long-term capital gains are added on top of earning income. Earning income fill up the tax bracket first and is taxed at earning income tax rates. Net long-term capital gains fill up the remaining space and are taxed at capital gain tax rate. Remember, net long-term capital gains are taxed at graduate capital gain tax rate. When we have a large amount of capital gains, we can be subject to all three tax rates. I have clients whose annual capital gains are 3 times higher than their salary when they are working. We normally see this scenario from ultra-high net worth families when wealth is transferred from one generation to another. This article aims to answer the questions by examining various scenarios and providing insight into the relationship between the bargain element, capital gains, and AMT. What is the bargain element? The bargain element is the difference between the market price of a stock and the exercise price of an option when the option is exercised. This difference determines the taxable amount under AMT when exercising ISO. What is AMT? AMT is a parallel tax system designed to ensure that individuals and corporations pay at least the minimum amount of tax. It operates by adding certain tax preferential items back into taxable income and applying a separate tax rate. One such preferential item is the bargain element from ISO. To understand the max bargain element before AMT and federal tax liability, let's explore some scenarios based on different tax filing status and earned incomes. Single tax filing status, earned income $100,000, max bargain element before AMT $38,936, federal tax liability $13,841, earned income $250,000, max bargain element before AMT $39,603, federal tax liability $53,465, earned income $500,000, max bargain element before AMT $103,261, federal tax liability $142,965, earned income $1 million, max bargain element before AMT $169,422, federal tax liability $329,986. Let's add long-term capital gains equal to our earned income to see what the bargain element before AMT and federal tax liability are. Single tax filing status, earned $100,000. Long-term capital gains, $100,000. Max bargain element before AMT, $38,936. Federal tax liability, $28,841. Earned income, $250,000. Long-term capital gains, $250,000. Max bargain element before AMT, $39,603. Federal tax liability, $100,465. Earned income, $500,000. Long-term capital gains, $500,000. Max bargain element before AMT, $17,561. Federal tax liability, $260,290. Earned income, $1 million. Long-term capital gains, $1 million. Max bargain element before AMT, $169,422. Federal tax liability, $567,986. Adding long-term capital gains can influence the max bargain element before triggering AMT. Why did the max before AMT increase, decrease, and then increase? Here is the direct quote from a tax specialist I have a relationship with. We should expect the max before AMT amount to change as other income elements to change. That is, AMT only comes into play if when the tentative minimum tax that is calculated on line 9 of Form 6251 exceeds the standard tax obligation. When that happens, the difference between those two amounts is technically your amount of AMT. As your regular income increases, which is what happened with higher wage amounts, so does your standard tax obligation. You can watch my educational video on understanding the relationship between the standard tax liability and the tentative AMT liability to learn more. Let's make the bargain element equal to our earned income to see what the max bargain element before AMT and federal tax liability are. Single tax filing status. Earned income $100,000. Bargain element $100,000. Max bargain element before AMT $38,936. AMT liability $15,877. Federal tax liability $29,718. If we take the total federal tax liability of $29,718 minus the AMT liability of $15,877 equals the federal tax liability without AMT liability is $13,841. The $13,841 is on the first scenario of this video. Earned income $250,000. Bargain element $250,000. Max bargain element before AMT $39,603. AMT liability $58,338. Federal tax liability $111,802. Earned income $500,000. Bargain element $500,000. Max bargain element before AMT $103,261. AMT tax liability $135,083. Federal tax liability $278,048. Earned income $1 million. Bargain element $1 million. Max bargain element before AMT $169,422. AMT liability $232,562. Federal tax liability $562,548. As we can see, having a bargain element of $0 to $1 million doesn't change the max bargain element before AMT, because max before AMT is the amount we can have before we are subject to AMT liability. We are going to change from single tax filing status to married filing jointly tax filing status to all the previous scenarios so we can see what the max bargain element before AMT and federal tax liability are. Married filing jointly tax filing status. Earned income $100,000. Max bargain element before AMT $64,194. Federal tax liability $8,032. Earned income $250,000. Max bargain element before AMT $33,590. Federal tax liability $39,077. Earned income $500,000. Max bargain element before AMT $28,591. Federal tax liability $108,279. Earned income $1 million. Max bargain element before AMT $168,921. Federal tax liability $292,072. Let's add long-term capital gains equal to our earned income to see what the max bargain element before AMT and federal tax liability are. Married filing jointly tax filing status. Earned income $100,000. Long-term capital gains $100,000. Max bargain element before AMT $64,194. Federal tax liability $19,545. Earned income $250,000. Long-term capital gains $250,000. Max bargain element before AMT $33,598. Federal tax liability $86,077. Earned income $500,000. Long-term capital gains $500,000. Max bargain element before AMT $28,591. Federal tax liability $221,632. Earned income $1 million. Long-term capital gains $1 million. Max bargain element before AMT $35,621. Federal tax liability $530,072. Let's make the bargain element equal to our earned income to see what the max bargain element before AMT and federal tax liability are. Married filing jointly tax filing status. Earned income $100,000. Bargain element $100,000. Max bargain element before AMT $64,194. AMT liability $9,310. Total federal tax liability $17,342. Earned income $250,000. Bargain element $250,000. Max bargain element before AMT $33,590. AMT liability $58,947. Total federal tax liability, $98,024. Earned income, $500,000. Bargain element, $500,000. Max bargain element before AMT, $28,591. AMT liability, $131,995. Total federal tax liability, $240,274. Earned income, $1 million. Bargain element, $1 million. Max bargain element before AMT, $168,921. AMT liability, $270,027. Total federal tax liability, $562.98. The relationship between the bargain element, AMT, and capital gains is intricate and varies significantly based on our tax filing status and income. By understanding these dynamics, investors can better navigate their tax liability when planning to exercise ISO and selling the shares. Please note that this material is for educational use only. Tax law are written in pencil that can always be rewritten. Tax law are complex. There are exceptions to the rules, and it is constantly changing, so don't do it alone. Be sure to talk to a qualified professional before making an informed decision. I hope you enjoyed this video and thank you for watching. Until next time, this is Tan, your trusted advisor.